CNBC Africa's Bronwyn Nielsen spoke to Colin Coleman, head of Goldman Sachs Sub-Saharan Africa at WEF, and asked him whether one would get your money back if you invest into Sub-Saharan Africa.
Yes, look, I think, the unfolding human drama you've just described is of great concern and will be a test for Nigeria's security establishment to get on top of it. But directionally, over time, Africa's overall macro-political stability has improved dramatically with the formation of democracies, multi-party democracies, much greater stability and underlying economic growth that is fundamentally very positive.
Colin, give me an update on the depth and breadth of capital markets on the African continent as you see them.
Well, the most activity that's going on is trying to finance transactions, finance companies that are growing. You just bear in mind, Africa is 15% of the world's population, but 3% of the GDP. It's now growing at 6.5% over the next 20 years. And with that, it's going to require a huge amount of equity and debt financing. Unfortunately, the equity capital markets only really exist in South Africa of size and liquidity. The other markets have a huge amount to develop, not unlike China did 30 years ago. So it's really important that the debt and equity markets develop. Goldman Sachs just issued a bond, for example, for one of Nigeria's banks, Zenith, a couple of weeks ago, $500 million. And there's a lot of sovereign activity, a lot of corporate activity that's going on in financing this growth.
What does that pipeline for M&A look like onto the continent?
Well, M&A is always going to be lumpy. And so, there's a lot of M&A going on around South Africa, but really companies are developing. You don't have many Dangote Cements, $24 billion market cap companies outside of South Africa in these markets. There are a handful of multi-billion-dollar market cap companies. This is really medium and small companies that are developing fast that require the financing. Having said that, Brazil, India, China, the sovereign wealth funds, the private equity groups are all extremely active, and we see in the Goldman Sachs pipeline a mix of this M&A financing, underwriting activity that I've spoken of.
The South African election results, the uncontested results, are due out shortly. Currently, ANC sitting with just over 62% and the DA at 22%. Are you satisfied? Are other businessmen in Africa satisfied with the outcome of what we're about to see in South Africa?
Look, I think it was predictable. I think where we're going now is really a question of what South Africa and the ANC administration does with its fifth term. It's really important that its first step, which is the formation of the cabinet, is the best in class of people, the generals and the foot soldiers who are now going to administer the next 5 years, really implementing the National Development Plan, really dealing with this twin problem of economic growth on the one hand and inequality and poverty on the other.
And then just finally, Colin, from all the discussion here, one of the biggest opportunities I'm seeing on the continent is the power environment, the energy poverty that we have here, with the stat that most countries losing between 2 and 5% of potential annual GDP growth. Is that the biggest opportunity you see?
This is the rub. If you look at Nigeria, the vested interests who want to see the diesel environment continue, which is high cost, high polluting energy versus low cost power-based generation, is really the kind of tussle that's happening in the society. Of course, we have to see power generation multiply many times over in Nigeria, but they've got to get the societal dynamics right to deliver that for their people.